The first half of 2026 brought its requisite supply of geopolitical shocks, market turmoil, and other complications. Today, we ask Trivest Partners Jamie Elias, what will the second half hold for PE investors? Now, I know that you spoke on this topic at a DealMax panel.
Right.
Can you tell me about some of the key themes that emerged from that discussion?
Yeah, I mean, I'm at a high level optimistic for the second half of 2026. If you go back literally 25 years, there's always something. There's 9/11, great financial crisis, government shutdowns, COVID, tariffs. There's always something, but it does feel like the environment is settling down, and things that we've lived with for months now, tariffs, et cetera, are largely known. And so I think you can't let the geopolitical or the economic backdrop as an excuse to say why you're not going to get something done or you're going to be less busy, if you will. But the environment does seem that it's conducive to deal making in the second half.
Okay, that's great. Still, there is a lot going on in the market today,
Always.
of course.
Always.
So what do you think the key theme or the defining event might be for the second half of 2026 for private equity?
Well, hopefully it's nothing external, but I think that there is, the industry went through a difficult patch when in 2020 and 21, you had very high valuations, lots of deal making, and there's lots of companies out there that it seems that buyer and seller's expectations are finally coming together. If you bought something in COVID during the boom time, if you will, you have an expectation of what the company's worth. It might not be worth as much as you paid for it from a multiple standpoint, but it's now 2026. We're 5 years, 6 years into those hold periods. And it feels like things are coming together. At Trivest, we focus on founder and family-owned businesses, and we've managed to exit or sell 20 of our portfolio companies since the start of 2023. So every 60 days, we're selling a portfolio company, and we are seeing buyer behavior. And I think that we are also realistic in that, our job is to take money from our investors and then turn around and return that capital in some reasonable period of time.
Mm-hmm. It's great to hear that the exits are rolling through.
Right.
That's wonderful news. My last question for you, I'm curious if you could give any advice to private equity investors to better position themselves through the rest of 2026 and into 2027. What would that be?
I mean, that's every firm is unique, and I think every firm has to have a strategy of what differentiates themselves. There's 3,000 of us in I think North America alone, private equity firms. And so at Trivest, we focus on what makes us different from all the other private equity firms, because with business owners now, capital has almost become a commodity, if you will. And just because you have committed capital, or if you're an independent sponsor, that's really not the differentiating factor. The differentiating factor, if the business owner is going to reinvest and have a, quote, second bite of the apple, I think that the new battleground is who can turn that rollover investment for the business owner, who can do the best. And that might, even if it's a sponsor-backed company, the management teams do have a say in who gets ultimately selected within a reasonable valuation if there's 2 or 3 competitors at the end. And so focus on making sure that you can convey what makes you different and how you think you can turn rollover equity into do better than the competitors that they're speaking with.
All right. You definitely have to stand out from the crowd, it
Correct.
seems. Thank you so much for joining us, Jamie.
Absolutely. Thank you for having me.